Okay, so this next video lecture is about our module number 8 for cost accounting and control. So this is entitled Accounting for Factory Overhead. So the discussion will be the computation of the factory overhead rate, allocation of service department cost, activity-based costing, and the computation of our factory overhead variance. So to start with, let us discuss the computation of factory overhead rate. So basically, another term for factory overhead rate is manufacturing overhead rate. So this is a standard amount for the overhead cost to be assigned to each unit of production. So this will be used later on in accrual basis accounting in assigning the overhead cost to each units that have been sold and also those inventory stored still in our warehouse. When the goods are sold, your factory overhead cost assigned will be charged to expense. And the concept is not used for any decision-making activity since it is made up number that is only intended for applying our overhead cost per the dictates of the accounting standards. So basically, it's or when we look into the factory overhead costs, so these are indirect cost, okay, and this is more of a standard amount than an actual amount, okay. Although actually there is an actual amount, but the preciseness of the determination of this cost is not that much, okay. That's why estimated amount is only used, okay, for factory overhead costs. So manufacturing overhead rate, this is derived from the most recent history, okay, of the cost which actually incurred, perhaps for the past year or for more accurate basis for the past 3 months, okay. This is on a rolling basis. So this overhead cost will be divided by the estimate of an average number of units expected to be produced in the forecast, okay, in the period to arrive at our manufacturing overhead rate. So basically, this is most recent factory overhead cost or factory overhead cost actually incurred divided by, okay, the number of the average units expected to be produced. Okay, so this is how we determine the manufacturing overhead rate. So this amount will be loaded into the bill of materials for each product that a business manufactures so that the standard rate is automatically assigned to each unit as it is produced. So basically, this is possible for the manufacturing overhead rate to diverge from the actual amount of the overhead incurred. So the result is either, as we have encountered before, it's either an over application or under application, okay, of factory overhead costs. So how do we calculate factory or manufacturing overhead? So this is by identifying the manufacturing overhead costs that help production run as smoothly as possible, meaning we will add all the indirect costs to calculate the manufacturing overhead. All indirect materials and labor will constitute the manufacturing overhead. And after we determine the total manufacturing overhead, we can now calculate or determine the overhead rate. So once manufacturing overhead costs are estimated for a month, for example, then we can determine the overhead rate. So this is actually the percentage that we must pay, okay, for overhead rate. For example, if we are using a monthly basis, okay. So to compute the overhead rate, so you just divide the monthly overhead cost by the total monthly sales, or we can also use other bases such as direct labor hours or machine hours, okay, whichever the management will use, okay, in determining the overhead rate. And we will multiply it by 100 to get the percentage, okay. So we have here an example. if the company has 80,000 in monthly manufacturing overhead and 500,000 in monthly sales. So using the formula that we have mentioned earlier, okay, so we will divide 800, which is the manufacturing overhead, by the sales, okay, of 500,000, and we will multiply it with 100%. So this means a result of 16%, meaning 16% of the revenue will go to our overhead cost, or it pertains to our overhead cost, or 16% of the sales is overhead cost, meaning sales is our basis, that's 100%, and out of that, 16% of that is for the overhead cost. So if manufacturing overhead rate is low, this means that the business is using its resources efficiently and effectively, meaning there are lesser indirect costs, okay, and more of direct costs. On the other hand, of course, if our manufacturing overhead rate is high, meaning it indicates that there is lag in the production process. That's why there are a lot of indirect cost that was spent. Okay, so this is the analysis. Determining the manufacturing overhead expense can also help create the budget for our manufacturing overhead. So we can set aside, or the company can set aside, the amount of money needed to cover all these overhead costs later on. So according to GAAP standards, okay, the manufacturing overhead, we have discussed this before actually. Our manufacturing overhead should be added, okay, to the direct labor and direct materials to determine the cost of goods sold and the value of our inventory cost. In fact, your manufacturing overhead is part of manufacturing cost, inventoriable cost. Okay, so this is very important. So this cost must be included in our stock valuation for our finished goods, as well as in our work in process. Both our cost of goods sold and inventory must be reported in your income statement as well as in our balance sheet. Okay, so that's how important also manufacturing cost is. But for purposes of control, the entity should at least maintain a lower amount of this cost, so that they will make sure that what was expensed during the production are mostly direct costs only, or with lesser indirect costs. Okay, so those are for the determination of our manufacturing overhead rate.